Most people only hear about 5x tech stocks after they've made their move. You see the headlines, CNBC starts talking, Reddit threads explode, and by the time you click buy, you're already at the exit liquidity. What if you could get ahead of the noise? Today, I'm going to show you how to spot breakout tech plays before they happen, and how to use TradingView like a hedge fund analyst to trade them. No paid subscriptions, no fancy software, just real research, real strategy that the pros have already been using for years. Here's what we're diving into. First, I'm going to show you how to identify promising sectors with stocks that are primed to explode, like automation, quantum computing, and cybersecurity, those type of sectors right before the hype comes through. Now, second, I'm going to show you what traits to look for in stocks that have real 5x potential, based on narrative, fundamental, and most importantly, institutional behavior. And lastly, I'm going to show you how to use TradingView's free version to create pro-level watch lists, break down technical setups, and plan your entries and exits like a sniper. The truth is, the biggest market moves are usually obvious in hindsight, but the best traders know how to read clues in real time. You don't need insider info, you just need process, timing, and tools. This video is your blueprint. Whether you're a beginner trying to build a winning edge, or an experienced trader looking to sharpen your flow, I'll give you actionable frameworks and show you how I personally spot opportunities before they go viral. If you're tired of chasing momentum and actually want to spot the trend early, this one's for you. Let's get into it. Here's the reality. Tech isn't just another sector. It's a launchpad for generational wealth. That's because technology doesn't evolve in a straight line. It leaps. A new algorithm, a new innovation, or a hardware shift can change the game overnight. And when those changes hit the public market, the companies positioned correctly can skyrocket. That's why smart traders keep tech at the core of their playbook. It's not about hype, it's about leverage. In no other sector can a small cap firm go from obscure to essential in a matter of quarters. And when you understand how to find these signals early, before the media cycle, before the fund flows, you position yourself for real alpha. But to do that, you need a system. And that's where TradingView becomes more than a charting platform. It becomes a trader's lab. You can test setups, visualize sector rotation, identify price-volume correlations, and execute with clarity. It's a bridge between narrative and numbers, and between ideas and execution. This isn't guesswork, it's a strategy, and now you have the blueprint. So let's get into the 3 signals of a 5x tech stock winner. To find the next 5x winner, we're looking for a perfect storm. Emerging narrative, undervaluation, and clear institutional interest. Here's how you can break that down. First is emerging industry narrative. Every 5x stock rides a story. That story usually starts small. Whispers in tech forums, hidden patents, and small contracts signed. But it grows fast. Your job is to find it early. Start with sectors where tech is evolving fast. Quantum computing, AI defense, cybersecurity automation, AI, or even advanced robotics. These are still under-penetrated markets, often filled with startups or small spin-offs from larger defense or enterprise players. Use Google Trends to track different search interests around buzzwords. Combine that with Twitter or X, Substack, and different industry reports from like Deloitte or McKinsey. And if you see any overlap, that's a signal. Look at different ETFs like ARKQ, BOTZ, and HACK. The holdings of these ETFs gives you a filtered list of the companies that are primed to explode. They're all based around different sectors for each ETF. These are based on underlying narratives but haven't broken out yet. And a pro tip is you want to check the conference schedules. CES, DEF CON, RSA, or SXSW. These events often reveal the direction of institutional attention months before they happen. Now, number 2 is undervalued fundamentals. Once the story checks out, the next question becomes, does the company have real traction? And is it cheap enough to explode? What you can do is go to a free site called FinViz, which is going to allow you to scan for different stocks. On FinViz, you want to use these scanner settings. The market cap should be under 2 billion. This will allow to give it room for growth. The revenue growth should be over 20% year over year. The PEG ratio should be under 1.5. There should be insider buying in the last 6 months, and institutional ownership should be over 30%. But not too high, because you want to give it room for further entry. This gives you companies with strong momentum that aren't already overbought by Wall Street. You're looking for early stage growth narratives with the fundamentals to support its run. Now, number 3 is a unique moat or contract wins. This is the X factor. This is where the tech sector gets pretty noisy. But true 5x plays have something that's hard to replicate. Maybe it's proprietary tech, like an AI algorithm. Maybe it's a defense contract that nobody noticed. Maybe it's a unique team, building something that other companies can't copy. For example, Palantir, or PLTR, had years of government contracts before it went public. And when retail caught on, it skyrocketed. But early institutional holders were already up huge. You can use news scanners like Seeking Alpha or different company investor pages to catch press releases. And a crazy tip as well is you can look at LinkedIn job postings to reveal product launches or big expansions. Combine all three of these signals, narratives, fundamentals, and moat, and you're not just gambling, but you're positioning yourself like a fund. Now, let's turn research into execution. Once you've got a short list of promising stocks, it's time to dig deeper. This is where TradingView comes in. And it's not just a charting platform, it's your command center. So step one is building a sector-based watch list that actually works. This is where you don't just want to save tickers randomly. You want to organize them by narrative clusters, quantum AI, automatic logistics, cybersecurity infrastructure. Tag them by certain sectors or potential catalysts that are coming up. TradingView also allows color-coded tags, personal notes, and even embedded checklists. For instance, you may tag a stock as a waiting breakout, post-earnings setup, or watch for pullback. And a pro tip is that you create separate watch lists based around narrative plays, earnings movers, and breakouts or consolidations. This mirrors the workflow used by institutional desk traders. Now, step two is you want to use technical indicators that actually build a story. The goal isn't to add 20 indicators, it's to add the right ones. And here's a huge high conviction combo: EMA 20 and EMA 50 crossovers. Golden cross setups can be powerful confirmation tools in different emerging tech names. The second one is RSI in the 30 to 50 zone. Many traders look for RSI below 30, but in strong uptrends, RSI is typically going to bounce off the 40 or the 50 mark. This is a sign of a healthy retracement. Next is volume profile plus OBV, which is on balance volume. Volume tells you who's moving in. Look for rising OBV, even if price is consolidating. This often precedes the breakout. And lastly is Fib retracement levels. Use Fibonacci from major swing high or swing lows to find areas of potential resistance or support to find your entries. Now, step 3 is setting alerts and finding a digital trading journal that you care about. Most traders lose because they forget the why. TradingView lets you log a thesis directly on the chart. Write your reason for watching the stock, setting an alert, and note the catalyst that you're waiting for. Use alerts like price crossing a key level, or different EMA crossovers, or an alert for a volume surge. This will build pattern recognition, and over time you'll start seeing opportunities simply using this. Now, the real edge is to systemize what you have. When you combine visual indicators with a repeatable habit and journal, you're no longer going to be guessing. You're going to be executing a framework. And that's the difference between casual traders and consistent performers. Now, let me show you this with a real-life case study. Let's take a look at Big Bear AI, or BBAI. Imagine this, it's early 2023. The market's been recovering, tech is cautiously climbing, and the AI narrative is beginning to spark real interest in these AI companies. But beneath the noise, you find Big Bear AI, a small cap defense contractor with cutting edge AI capabilities, sitting very quietly under a 500 million market cap. No big hype yet, just quiet accumulation. That's the kind of environment where asymmetrical opportunities live. So let's start with the narrative. The narrative is that Big Bear AI specializes in AI-powered support and decision-making, primarily for government and defense contracts. That alone is compelling, but what really matters is the timing. As AI becomes a national priority, Big Bear isn't just innovating, but they're embedded. They've already landed key federal contracts. In fact, they were already awarded a multi-million-dollar deal with the US government in defense. That kind of placement positions them for years of sticky revenue. You also have a tailwind. Government AI funding is ramping like crazy. Policy shifts are placing a national coverage on AI and battlefield decision-making processes. And Big Bear has already proven that it can play in that league. The fundamentals are looking strong. With a market cap of about 500 million, revenue growth is 25% year over year. It has consistent contract wins in both the commercial and government space. Insider buying shows confidence from within, and institutional ownership is quietly rising every single quarter. Not does this only fit the narrative and valuation that we talked about earlier, it passes the sniff test. Small, growing, and unrecognized by the broader market, at least for now. Now, here's the TradingView setup. When you open the chart on TradingView, you see what the institutions start to see. The 50 EMA recently crossed above the 200 EMA. That's a golden cross, often leading into a momentum shift. RSI is healthy, bouncing off the 45 to 50 zone, showing accumulation rather than exhaustion. OBV is steadily rising, even when the price consolidates. A clear divergence suggesting smart money entry. and major resistance sits at the $3.20 mark. If volume accelerates through that level, the chart quickly opens up to the $5 to $6 range. This is how real traders move. They don't just chase, they plan, they wait, and they execute. Now, the secret here is not about catching every wave, but it's about catching the right ones. Just a few simple plays can turn your fortune into financial freedom. And that's where the frameworks we covered in this video come from. Now, if you want a more in-depth guide on the exact scanner tools and FinViz settings that I use to find even more stocks right before they explode, I have a full video on YouTube going over that exactly, and I'll leave it in the description below. So check that out right now so we can show you exactly how to find these stocks and also trade them so you can catch these massive risk-reward trades. Hit the subscribe button, leave a like, and I'll see you guys in the next video.